Hello everyone. Rising US-Iran tensions are casting doubts of an end to the Middle East conflict, now in its 8th week, injecting fresh volatility into markets. Oil is stabilizing after a sharp pullback, equities are retreating from record highs, and the US dollar is pushing higher as geopolitical risks resurface, keeping dollar-yen elevated. This is your weekly technical outlook here at xm.com. Now let's get started. Let's start with oil, which opened higher ahead of Tuesday's ceasefire expiry, with limited hope for US-Iran peace talks and ongoing disruptions in the Strait of Hormuz, keeping upside risks in play. This follows the recent unwinding of war-related risk premiums that triggered a sharp pullback. That said, renewed hostilities could propel prices back above 100. Such a scenario is not being priced in, though, for now. The price action is currently hovering near the 90 level after rebounding off this one-month low and off the 50-day SMA near the 81.78 level. Should it resume higher, then immediate resistance might come from last week's high near 95.15, followed by the key 20-day SMA near 97.92. And a break above this area could reclaim the 100 key psychological level and revive upside hopes. Now to the downside, support lies near this one-month low near 81.78, followed by deeper levels in the 71.20 area. The momentum signals are reflecting this fading of the strong bullish momentum, with the MACD retreating below its red signal line and hovering just at the zero line, and the RSI reflecting this uptick, but still lying located below the neutral level. Now let's also have a look at the US500 index. Stocks started the week hovering near their record highs after a strong 3-week rally driven by peace talk hopes and optimism around robust Q1 earnings. However, the index's V-shaped recovery may be tested as renewed Middle East tensions curb confidence that a lasting de-escalation is imminent. Now, the US100 index is currently hovering near the 7,000 psychological mark after a pullback from the record high near 7,147. The immediate support lies near the 7,014 level, which is January's all-time high, and a break below this level could accelerate downside toward the 6,800 area, which lies just above the key 50-day SMA near the 6,770, and followed by support near the 6,730 level, which triggered this sharp rebound, and lies just above the bullishly converging 20 and 200-day SMAs near the 6,095 area. And the next support to watch is the 6,660 level, which is the 50% Fibonacci retracement level of this pullback from the January 28th peak to the March 31st low. Now, the momentum signals were around overbought conditions, with the RSI and the stochastics tilting to the downside from the overbought region, while the MACD is overextended to the upside, reflecting the broader bullish bias. Now, let's also have a look at dollar-yen. Dollar-yen remains elevated as dollar strength and fading expectations for a near-term BOJ rate hike continue to weigh on the yen, while intervention risks cap aggressive gains, renewed geopolitical tensions and higher energy prices support the upside. Upcoming Japan CPI data could briefly challenge the pair, but the broader bullish bias remains intact, with dips still attracting buyers. So technically, the dollar-yen is hovering just below this 20-day SMA near the 159 level. Should manage to break above, as this bullish flag supports further upside, then immediate resistance might come from the 159.70 level before it retests this intervention zone near the 160.45 level, last tested in late March. Now, to the downside, immediate resistance might come from the Immediate support might come from the range floor near of this multi-month consolidation near 158.20, followed by the 50-day SMA near 157.90, and then further below by the 157.50 level, which triggered this rebound on March 19th. Now, the momentum signals reflect, despite the bullish bias in dollar yen, the momentum signals are holding a neutral stance with the RSI flatlining at the 50 neutral threshold and the MACD below the red signal line, but still in positive territory, suggesting that this consolidation could continue before a push higher. Now that's all for today's market wrap. Thank you for watching.